Oh, hey, everybody. Welcome to Dumb Investing. I'm Lloyd,
I'm Harry.
and it's about to get dumb up in here. So, to all 7 of our regular viewers, hey, welcome, or 8, including Harry's dad now. All right. Welcome back. This is the dumbest investing show you're going to see on all of YouTube. This is where these two dummies are fighting Wall Street with random dice throw and some random stock organizing buying stuff. It's crazy. Watch the other shows that explain it. So,
Great intro.
great intro. We're getting better at this every day. Oh, so what we do here, we throw random dice. We go out to a random stock picker. We pick 3 random stocks every night. We do a little bit of homework. And between the two of us, we pick the least dumbest idea of this dumb charade that we call a YouTube show.
Well, at least we try to convince ourselves that it's not as dumb as the other ones, right?
Well, at least we are honest. We full transparency. We show you everything. You can come along for the ride, and it doesn't cost you your retirement like it costs Harry and Lloyd. So, with that, did we want to do any other talk, or should we get right into business?
Let's get into it.
Get into business. All right. So, folks, we're going to go out here. We're going to roll our random dice generator. It's going to give us a number, a 4. We're going to go out here to our random stock picker. We're going to get the 4th stock here. 1, 2, 3. 4th stock. P set is the first stock we will look at tonight. Roll our random dice again. And we get a 4 again. Awesome. 1, 2, 3, 4. Store is the second stock we will be looking at tonight. And our last stock, 3 clicks. 1, 2, 3. Oh, Fate. What is that?
Oh, it must be.
Yeah. Wow. Let's pick that one without even doing any homework.
I'm in.
Oh, and that's how dumb investing rolls. Put a bunch of money on Fate and just call it good. All right, so this is the part of the show where Harry goes out to our Webull account and generally uses Webull to do some homework. I tend to go to Yahoo, and between the two of us, we somehow figure out if one of these stocks. Well, we have to buy one of them, so we figure out which one is kind of like the least of the bad. And Fate Therapeutics. Oh, I don't know about this. Therapeutics. I just smell snake oil. Oh, yeah. There's a whole lot of red in their earnings. Yeah, that's not good. Oh, my.
Wow.
Woo! Yeah. They had a tough year in 2020. Their revenue did double from 19 to 20, but their losses look so, earnings.
That's not great business fundamentals, is it?
I would say maybe they got a good plan. Well, 6 people are saying we ought to buy it. Yeah, you ought to go buy this. I mean, they've already lost all the money they're going to lose, right? Okay. Therapeutics.
They were up 7.5% today.
Oh, yeah? Well, we missed that boat. All right. Clinical stage biopharmaceutical company develops programmed cellular immunotherapies for cancer and immune disorders worldwide. Well, that is some cool stuff, but why are they losing money?
Well, looking at their financials here, and I don't think you can pull it up there, but from what I can see is that they are paying a ton of interest.
Oh.
Upwards in the realm of $45 million in interest, and their revenue is $31 million. So generally, that's not great.
No. What's the end play, though, right? There's got to be an end play.
Definitely. So they've been around since 2013. Huh. I think they're just $30 million in revenue, dude.
Man, their stock price has gone nuts in the last year.
I don't know. Like
I
that
don't know.
scares the living bejesus out of me.
I'm with you. If they're smart, they'd issue a whole bunch of stock right now and pay off some of that debt, right?
Maybe, hey.
And then dilute the crap out of for everybody else. All right, on to the next one. Let's see. STOR. All right. So STOR is Store Capital Corporation.
So Store Capital is an internally managed net lease real estate investment trust. The company is engaged in acquisition, investment, and management of single-tenant operational real estate, or STORE, properties. As of December 31st, the company owned a portfolio that consisted of investments in 1,660 properties operated by 360 customers across 48 states.
Does it give their top 10 who they're renting to?
Not in that.
They've had fairly good revenue even in 20. I mean, it's way down from 19, right? Well, revenue's up, earnings are way down to 19.
Right. Which makes sense. Everybody put a huge constraint on rent, right?
So depending on who their clients are, is this a recovery stock? Is this something where people are going to be going back, are these Main Street folks or these strip mall guys? Right. Single tenant makes me think it's more like a Walgreens, CVS's maybe,
okay.
Single tenant, stuff like that. I wish I knew more. They are a dividend paying stock of 4%. So we would at least keep up with Jay Powell's interest, right? We do a little bit better then. Okay, so that's something to think about. Do we have some other real estate stuff? I can't remember. I think we have one. Maybe we don't. All right, PSET. PSET is our last one we're going to look at tonight. And Principal Quality ETF.
Performance of the NASDAQ. I might be looking at a different one. I've got a PSET here, but it says Principal Price Setters ETF.
Huh. And Yahoo's pulling up Principal Quality ETF.
Okay.
Their chart, it looks much like a lot of the charts that we've seen lately. I mean, they were showing some fairly decent growth up until the pandemic. Disappeared, growth came back. It would appear like they're on the same trajectory as they were pre-pandemic.
That looks pretty good.
And it doesn't look bad, right?
It looks better than I think most of the charts show. Like they're well above their pre-pandemic levels, right?
Right. So what you said, it sounds a lot alike because this says that this investment looks at the performance of the NASDAQ U.S. Price Setters Index. Under normal circumstances, the fund invests at least 80% of its net assets plus any borrowing for investment purposes in equity securities companies that compose the index at the time of purchase.
Okay.
So, yeah, so it's an ETF tracking the NASDAQ.
Well, I got to tell you, after selling the Seas of Red for 2 days in a row, we'll see what day number 3 is. But I'm a little seasick right now.
Yeah.
And I'm feeling like an ETF that's following an index is kind of right up my alley right at the moment.
A little safe?
Yeah. I don't really want to be safe, but like I said, I'm seasick. But I can be convinced otherwise.
So let's go back and look at STORE one more time. So this one looks pretty safe, pretty calm, pretty smart, right? Store Capital is probably a more risky play on that whole recovery deal, and people are going to be leaving the houses more, shopping, because whatever these guys own, right? They need tenants. They need somebody that's going to own the property.
That's a big concern of mine going forward too. Is how do these recovery plays work? Like I think the consumer is going to be shopping online a lot, and I don't think that trend is going to stop. So it would totally depend on what these are. If they're warehouses for orders to be picked up from online consumers, or part of 3PL or logistics companies, those kinds of things, I could see that. I could get behind that. But if they're front stores, front facing stores and consumers, and I'm having a hard time with that. Ooh, fancy.
Yeah. I was hoping maybe they would tell us who their top 10 are. Oh my gosh. Let's see what their asset class looks like. Da-da-da-da-da. Yeah, they're not going to tell us who their top 5 are. All right, let's do the safe one. Let's do PSET. I can get behind that.
All right.
Yeah. Because I think we're going to start suffering from some scurvy here soon if we stay in these Red Seas too long. We're going to have to go get some limes. That's what the pirates used to do. They put limes in their rum so they didn't get the scurvy.
Oh, well, I'm totally fine with that. I can continue with that trend. All right, so let's take a look at our portfolio, I suppose.
All right.
And I got to tell you, I am concerned after seeing what happened today in the markets. That
was kind of ugly, huh?
The sea of red was redder. So these are the ones we just looked at.
Yeah.
So here's our positions.
Well, it's about 50-50 red and green. This is for the day, right?
That's right, yeah.
Yeah.
So somebody must have been watching our YouTube channel about BurgerFi.
Oh, sorry, BurgerFi. We want you to succeed so bad. That's why we gave you our candid response. We told you as it was.
Yeah, full transparency. We can't hide anything.
We can't. We're just not good at it.
So BurgerFi was down over 6% today. And then the growth fund from yesterday that was up was down a bit today. Looks like so.
Oh man, it's so close to where we were.
Yeah. And then the complete 180 on Saga Mobile again. Up 7.5%.
That's great. That is totally great.
It's entertaining anyways, right? They're certainly getting a lot of marketing out of us.
That for sure.
And KeyCorp was
all 8 people that watched.
The other one that was up, 1.5%.
Oh, well, that's good.
Yeah.
We bought that 2 days ago. All right, so yesterday was KNGS. How did KNGS fare?
Great.
Oh.
So down a little bit today, and we closed our position right at, well, let's see here.
Oh, the peak of the morning, almost the peak of the morning. Well done, Lloyd. Well done.
Right at the tippy top, anyways. Oh, well, what can you do, hey?
It is what it is, right? Long term. We're in this for the long play.
But the good news is that we're not down as much as we were yesterday. So we're sailing the Red Seas, but maybe the seas are starting to part.
They're less red by $5.
They are
That's
left red
awesome.
by $5. The rest of the market, on the other hand, was a lot more red than that. So, in terms of our risk
Oh,
level, we're
oh,
still
ho, ho.
way safe, right?
Yeah.
We beat the street.
Woo! That's what we want to hear. That is what we want to hear.
Yep. So overall, it was, I guess, a green day for us. That's good news. But
Disruptors today. Crazy world. Bitcoin hit what?
oh
$64,000.
my goodness, it was
A year
wild,
ago, it was $6,000. I mean,
unbelievable.
that's craziness. Coinbase showed up with a valuation of what?
In terms, well, I mean,
Was it a
their direct private offering came out at 380, right about there, 380,
yeah?
and has since it
Was it
went
a
up
billion
right away
dollars?
about 400, and then it came crashing back down to 320. So
What a wild, right? So that was 160-point move
yeah,
from high to low in one day.
yeah, it's
Woo!
big moves. I've been
Brutal.
checking it after hours here, and it looks like it's percolating up a little bit after hours. So we'll see. Maybe overseas market is wanting to buy in on some Coinbase stuff. We'll see how it goes.
Right on. Right on.
Yeah, it was a wild day though. Man, everything sold off. But
Oh,
what can you do?
yep. We'll see what happens tomorrow. And we should start getting a couple of our stocks are dividend plays. So we should start seeing some dividends start rolling in the next 15 days or so. So that'll be nice.
Cool.
That'll be passive income. We don't have to do anything and we're going to have money show up in our account. So that'll be fun. And for anybody that's watching, all 8 of you, thank you so much. Down below is the Webull link. Click the link. Put $100 in there. You're going to get at least one stock. One of our viewers got 2. So I don't know how that works, but click the link. Go get some stock. At least you'll be an investor. We always suggest you start this as soon as you possibly can. The compounding that happens over time is just amazing. Ask anybody that bought Bitcoin when it was 12 cents.
You probably won't find them because they're probably in some private island somewhere.
Yeah. So there's a guy over in England when Bitcoin came out. It was a hobby of his. He was trying to learn how to mess with it. And so he had started mining coins just for fun. And he mined 7-some thousand odd coins, put them on a hard drive, accidentally threw the hard drive away during spring cleaning. And that hard drive today is worth $425 million. And it's in a landfill somewhere.
Yeah,
So,
that's probably worth more than, you see those the guys that are going out and trying to find gold, right?
yeah.
People searching through the landfills trying to find that. There's probably more value in finding that hard drive than there is in the gold that they'll find.
No kidding.
Wouldn't that
All
be
right.
wild?
Well, everybody, thanks for joining us. We sure love having you here. We love doing this. We are full transparency. Down below is linked to our spreadsheet. You can go in there and see every episode, the 3 stocks that we randomly picked, the 1 stock that we chose to buy. You can see where we bought it at, how much we invested. If we get to the point, we're going to get to the point, some point where we have to start selling some stocks to keep this thing rolling. So you'll get to see when we decide to make our sales, how much we either made or lost, and all of that. This is full transparent. We're going on a trip. Hopefully we're going to do this for the next 10 years or so and have some fun, and we can start developing some dialogue and stuff like that through the comments. We'd love it if you guys had questions for us. We like to talk. We just run out of stuff to talk about sometimes. So as you go out there and you're playing in your Weebles, don't trade like that guy.
Yeah, don't trade like that guy either. Don't forget to like, subscribe, hit the bell, hit all those buttons in YouTube. Let's see what happens.
Yeah, hit them all. Why not?
You never know. Roll the dice.
Have a good night, everybody.
Good night, everyone.